Hello, my name is CA Anagha Thatte and I am going to talk about Revised Standard on Related Services SRS 4410, which talks about compilation engagement. Just to give you a background, why I have used or insisted on the word revise, because there was the earlier SRS 4410 which were in existence or which were in effect from 2004, and there is a drastic change between that SRS 4410 and this new revised SRS 4410, which talks about the compilation engagement. Nowadays, because of the change in the financial reporting framework and so many changes in the regulations, the compilation engagement framework, the compilation engagement per se takes lot of importance, and then to that extent this SRS 4410 plays a very vital role as far as giving the knowledge and the guidance to the practitioner in execution of the compilation engagement. So in this, as far as SRS 4400 is concerned, the word used was auditor, whereas in SRS 4410 revised, now I will not go on repeating revise every now and then, but in 4410, basically the word practitioner have been used. So a practitioner who is a chartered accountant or a firm of chartered accountant registered with ICAI and who is in practice. So that is the major difference between the earlier SRS 4410 and in this revised 4410. Now, the revised standard largely talks about introduction, objectives, then the definitions, and the requirement and the application guidance. So, if you are going to conduct the compilation engagement as per this SRS 4410, what is expected from a practitioner before executing the compilation engagement, the ethical requirement, the professional judgment, the engagement level quality control, the engagement acceptance and continuance, the communication with those charged with the governance and then the management, performing the engagement, documentation, and last but not the least is how the practitioner's report should look like as far as while executing the compilation and engagement is concerned. So largely in the compilation engagement, the practitioner who is either a engagement partner of a firm or a chartered accountant in practice applies accounting and financial reporting expertise. So he has to have that expertise as far as implementation of the financial reporting framework is concerned, assist the management in preparation and presentation of the financial information of the entity in accordance with the applicable financial reporting framework. So it can be a normal Indian GAAP which does not include Indian accounting standard requirement, or it can be in Ind AS as far as the new Ind AS requirement and the accounting standards are concerned, reports as required by this SRS. So just to make a differentiation between SRS 4410 which talks about compilation engagement and SRS 4400 which talks about agreed upon procedure. So in compilation engagement, it's not the assurance service and hence should not be considered as a agreed upon procedure thing. It's only pertaining to the compilation as far as the financial data is concerned. Basic premise for the compilation engagement. It is not at all, as I mentioned, it is not at all an assurance engagement. No requirement to verify the accuracy and completeness of the information given by the management, and no requirement to gather the evidence to express any audit opinion or review conclusion. So basically you have to compile the data, no additional execution as far as the audit, limited review or any kind of verification is concerned. Management retains the responsibility for giving the full and complete financial information. So value of CE, so compilation performed in accordance with this SRS 4410, then in that case you have to comply with all the provisions or the paragraphs or the stipulations given in SRS 4410. Application of the expertise in accordance in accounting and financial reporting. So whatever expertise you have gathered over the period of time, various industries you serve, that expertise needs to be utilized in applying the compilation engagement. Compliance with the standards issued by the institute, which includes ethical standards as well, and then the clear communication of the nature and extent of the practitioner's involvement Nowhere it should give any color that the practitioner has actually done the verification or the audit of the compiled financial information. So, what are the conditions in SRS 4410? First and foremost is the practitioner is engaged to compile the historical financial information. So basis of the historical data, it is just the compilation in the applicable financial reporting framework is concerned and provide a report for engagement in accordance with SRS 4410. So if the compilation engagement is being executed based on this SRS 4410, you have to give the report, give a assertive statement as far as the compliance with SRS 4410 is concerned, and then all the provisions pertaining to this SRS 4410 needs to be fully complied with as far as the practitioner's responsibility is concerned. Hence, it is very essential to understand what this SRS means and how it plays a very important and crucial role as far as the overall execution is concerned. So, mandated SRS 4410 considerations. If the financial information is required by law and regulation, then required to be publicly filed. So, for example, if the company is going for any IPO, and in that case, if they have to compile the information in a different format, then that compilation will be made public based on the IPO procedures as far as the SEBI regulation is concerned. The external part is likely to associate with practitioner's name with financial information. So if in that compilation engagement, if the name of the practitioner is getting associated, then he has to take into consideration the risk that a level of association will get misunderstood by the general public, and so he has to be very careful in applying the professional judgment vis-a-vis while issuing the report under this SRS, which specifically talks about the report is only for the limited purpose as far as the compilation is concerned, and the responsibility for giving the full and complete information and the management estimate still lies with the management. The practitioner can able to give his expert opinion or the advice, but he should not be held responsible for as far as the decision to go ahead with that given stipulation is concerned. As I have already mentioned, this standard also wants to comply with the SQC1 standard. So applies to the firm with reference to the compilation engagement is concerned. But in case of any deficiencies in firm's SQC, the QC system, the quality control system, does not necessarily mean engagement not carried out in accordance with the professional standard and legal and regulatory requirements, or the practitioner report was not appropriate. So the standard says you can rectify the QC deficiencies on a firm level. That does not have any impact if you have carried out the compilation engagement basis SRS 4410. So now what are the requirements? First and foremost is ethical requirement as far as the integrity, objectivity, technical standards, professional standards, and so on and so forth. And the very important thing is independence while carrying out this engagement. Then the professional judgment as and when necessary. Engagement level quality control, engagement acceptance and the continuance, communications with the management and TCWG, performing the engagement, documentation, and ultimately the practitioner report is very essential. So what these ethical requirements are? These ethical requirements are integrity. You have to be integrally carried out the engagement, objectivity, professional competence and all due care needs to be taken, confidentiality because you are getting, even though it is a historical information, you are getting access and the overall entry level to that financial information is concerned, and then the professional behavior. Independence is not a precondition for compilation engagement. So if you are not independent, then you have to disclose this fact in your report while giving the report at time. So what is the professional judgment made? What is the need? Because why the engagement of compilation engagement is given to you and not someone else. So there is a need for this professional judgment. So interpreting ethical and SRS requirements. So how you can interpret ethically as far as the compilation thing is concerned. making informed decisions throughout the engagement. Wherever you feel that you have to intimate the management that this is wrong or this was not correct, the accounting standard required things to be done, this is the disclosure requirement, those things are to be informed to the management and assisting management in deciding about the acceptability and application of the financial reporting framework, because you are the expert in the field and hence the job is given to you. So it is your responsibility to inform the management as far as the financial reporting framework is concerned. You can't be ignorance on that front. Whatever are the changes, whatever are the additional information available in the public, or in case of say ITFG, those kind of interpretational things needs to be brought to the attention of the management. So how you will exercise that professional judgment? So based on the facts and the circumstances of each case known to the practitioner up to the date of the report, the industry experience vis-a-vis the entity exposure or the entity information as far as the compilation engagement is concerned, knowledge from other engagements undertaken from various other clients without compromising the confidentiality of the data, understanding of the client's business and operations, that how the client business is being performed, whatever are the accounting treatments followed by the client over the period of time, in which application software the accounting is being done, how he can extract the data. So these kind of things are the expectations of the standard where the professional judgment and the expertise needs to be exercised. Extent of the management judgment required in preparation and the presentation of the financial information. So here the practitioner can able to guide the management, but he cannot enforce the management to take any decision. So ultimately the responsibility for giving a go ahead or taking a final decision rests with the management or PWCG. The engagement level quality control, overall quality of the compilation engagement assigned. There are specific responsibilities cast on the engagement partner. So in that case, how the engagement partner is expected to execute the direct supervision and the execution as far as the engagement, the compilation engagement is concerned, has been stated in this SRS. Compilation engagement being performed in accordance with the firm's QC, the quality control policies and procedures. That means there has to be a communication as far as the client acceptance of it, or if it is a continuing assignment, then the continuance of the assignment is concerned. Engagement team's competence and capability. There may be the qualified persons based on the requirement. There may not be directly qualified but the experienced person. Then in that case, the engagement partner is supposed to supervise as far as the compilation based on the financial reporting framework is concerned, direction, supervision and performance of the engagement as per the standard and the laws and regulations. So not only the FRF but overall the laws and regulations under which the compilation needs to be done, that also needs to be studied and the engagement partner should be aware as far as those laws and regulations are concerned, and the engagement documentation, that how overall the compilation engagement has been executed is to be documented. Engagement acceptance or continuance. So before actually starting working on the compilation engagement, you have to agree upon the procedures and the terms of the engagement with the management, and basis those terms which is agreed upon, you have to confirm the understanding between you and the management as far as the intended use of this compilation information is concerned, restriction on the use and distribution of the financial information which you are going to compile for the management, identification of the relevant financial reporting framework, objective and scope of the engagement, that why you want to compile this data for the management, where ultimately they are going to put this data, are going to use this data, practitioner's responsibility with respect to the ethical requirements, then the management responsibility, and then the expected form and content of the report. Record agreed terms in the engagement letter and other suitable format of the written agreement. So basically nowadays, considering the confidentiality and the importance of the information security, if the client would like to execute a separate NDA, a non-disclosure agreement, that can also be executed. But as far as the compilation thing is concerned, it needs to be specifically written to, and it needs to be done prior to performing the engagement. So communication with the management and TCWG. So on a timely basis, you have to make this communication basis the significance and the nature and the expected action if you are expecting from the management to take all matters considering the engagement, practitioner's professional judgment, and of sufficient importance to merit the attention of the management if you feel so. While performing the engagement, practitioner's understanding is very essential while compiling the financial information. Practitioner's understanding basically talks about the business and the operations in concern, the accounting system, the type of accounting records retained by the entity, and then the applicable FRF. It establishes a framework of reference to exercise the professional judgment if it is needed. Depth and breadth lesser than that of the management, because yes, you cannot run the business. So running the business, taking the decision is the management call. You have to, whatever is the decision taken needs to be properly accounted for based on the applicable FRA. Level sufficient to enable compilation under terms of the engagement, and it can be an ongoing process. So over the period of time, maybe a quarterly, half yearly, annually, so on and so forth. Compile using the records and the documents. You are not expected to go further and ask for any specific document. Whatever management gives as a sufficient record to compile as far as the financial information is concerned, that can be considered as sufficient. Discuss with the management if you are come across any errors, or like if on the contrary, if you are coming getting any two different figures looking at the same documents, then discuss with the management so that wrong information should not get compiled. Before completion, read the compilation what you have done vis-a-vis the understanding of the entity. Incomplete, inaccurate and unsatisfactory records, or if those things are being provided by the management, get it to the attention of the management and request additional or corrected information if it is within the given timeline. If for any reason, if you are unable to complete the engagement because management fails to provide the record, then there are two options. One is either withdraw the management, but before withdrawing, inform the reason to the management as well as TCWG, so that you have done your work diligently and it is the failure on the part of the management to give you the data. Propose appropriate amendments if became aware. So those amendments can be applicable if not adequately referred. CFI requires amendments to prevent being materially misstated, and CFI otherwise misleading. If the compiled financial information in your opinion is misleading, please say so. If the management declines or does not permit amendments, withdraw your engagement and inform the management and the TCWG along with the reasons. If withdrawal not permitted, then determine the professional and legal responsibilities, and ultimately whatever you will decide upon, please capture it in the form of the report. Obtain acknowledgement of the management or TCWG that they have taken responsibility as far as the final version of the compiled financial information is concerned. Documentation plays a very essential role. So documentation should include the significant matters, how the compilation has been done, final financial information for which management or TCWG is responsible, and they should acknowledge the responsibility, and ultimately the report. The standard talks about how the report should look like, or what should be the minimum content of the report. So title, addressee is either the management or the TCWG, the statement on compilation, description as far as the management responsibilities are concerned, then identification of the applicable FRA, identification of each element of the financial information, date, period, description of the practitioner's responsibility, description what a compilation engagement entails in accordance with this standard SRS 4410. Explanation that this compilation engagement means no assurance. Even though your name as a practitioner is being attached, you haven't done any audit or assurance processes. No audit opinion is given. And if special financial reporting framework is used while preparing, then make a mention of that. Last but not the least is the date, signature, and the place of the signing of the report should be stated. And based on the new UDIN requirement, you have to put the UDIN. So that's as far as the reporting requirements are concerned. Thank you.